Hi there, Richard here on Tuesday the 23rd of November, and this is a chart of the US dollar weekly. Now, we've talked before about the US dollar being at the center of the universe in terms of driving the broader financial markets, whether it be currency or in fact the indices, and that appears to be still the case. The weekly chart shows you that the resistance has been hit off this 78.65. This is the long-term descending trend line that's being respected at the moment and causing a pullback. If we go to the daily, that's more clearer. You can see that this is effectively 5 waves up in a minuet basis and is pulling back in a pretty straight line at the moment, although support is being found on each little bar. That's a daily bar. But the target, that would be right on 38.2% retracement there. We'd be looking for a little bit further, which should drive the other indices and currencies up a little to continue to test their overhead resistance. On the Australian market, the ASX 200, and this is the SPY, we can see that the MACD has just pushed through. Our target of 46.16 has been hit again, and this is, pretty much a bearish sign, but at the same time it is not convincingly breaking through this support line, which can be drawn across here, which is really equidistant with the overhead resistance that we can note here, the thick red line. So wouldn't be surprised to see a bounce here. That would push back up towards the 47.58. It is most definitely channeling, but soon enough we're going to see a breakout. As we look at the Dow on the US side, it's come up and really retested quite strongly this long-term resistance, but needless to say, it hasn't broken through, and even though our target 11,020 was hit, what we'd be looking for is a little bit of sideways action here, or even a bit of up action back to 11,400 before it finishes this what looks to be an A, B, C wave 4 correction. So if we were to measure the downside, we'd put a Fibonacci extension on, and that can be done as follows. And the nature of these targets has actually changed now. 10,940 would be the 61.8 extension, and the 1 for 1, i.e. this leg measured to an equivalent of 1 equidistant, would be 10,760 points, with a very deep correction pushing down to sort of the 10,460 odd mark. But the Dow generally retraces 50%, more so than it does on the 61.8. But to get an idea of that retracement, we can put on a Fibonacci retracement as opposed to the extension, and you can see that they're pretty much the same. So that's a good indication there. When you get those clusters of Fibonacci numbers, then that's pretty reliable. So 10,500 in the event that it did extend to the 61.8. If not, we're talking about 10,750 to 10,650 in between those two, the 50% retracements. That's the more likely target in there. So taking those off and moving to the Australian dollar, it looks like it wants to retest parity, crept up to 99, and that would be 38.2. This would be closer to the 61.8 retracement, and one would expect this then to come back down and in line with the indices retest this lower support line here. Although that's not confirmed, of course, in the event that there is really some bullish news, in particular in Europe and Ireland, if the IMF do give that a thumbs up, then who knows, it might be the start of the Santa rally. Whatever happens over the next few days, this week it's likely to be reasonably quiet, particularly from Thursday on, as the US of course goes on Thanksgiving. Here's the euro. This is a massive 800 pip fall, and the MACD has been broken below. We've seen this retracement, which is exactly the mirror opposite of what's happened on the US dollar. We'd expect this retest line to be absolutely retested before it continues on to the downside with 3,400 or possibly even 3,300 as the downside targets there, but that is still unfolding. Gold, well, you know, really came down hard off its highs, has retested this, well, it's not even a support line actually, it broke through the support line and is just hanging down in what looks to be an A, B. So this appears to be a B wave, which could be even a 1, 2, so the B and the 2 being pretty much the same in terms of corrective activity, but certainly this is a bullish candle here which is pushed back above the support line. This slow moving stochastic down here is likely to come up and retest the black line, but in the event that there's further weakness, this could also have been seen, not also, it is confirming that it's probably more likely to be the wave 2 up retest and then head on down to this 1323 target, and failing that, if things get really bearish, down to 1250, but I don't expect this one to unfold at this point. These are short-term, highly volatile movements that are happening within a pretty tight range. This is the weekly chart of silver, just to show you the opposite, how this blow-off occurred. You know, we had a spike high to test these, this upper band, this upper trend line. You know, it is clearly going back up again over the last 2 weeks, but this high hasn't taken out, and I'd be surprised if it was, frankly, although it might come up to retest again. But silver offers really good opportunities in terms of trading to the short side, but as always, when these turns close or at hand, they're often volatile, but it's also an opportunity to keep the risk as tight as possible. The last chart is on oil, and it's really reflective of what's happened in the US markets in terms of resistance and the perception that demand might be slightly less for oil in the event that things get bearish. You know, big retest of this channel line, climb back up in 5 ways, and now is doing what looks to be an ABC, and I'd expect that to retest this lower line, even though in the very short term we're likely to get some higher activity climbing back up to the resistance at you know, possibly as high as $86, but more likely just something in here at about $84.50 to $86. So that's it. For more information, please go to the marketforecaster.com.au, and I'll talk to you again soon.